What's up guys, welcome back to InvestingPH. So for today, we will review and analyze PLDT. This would complete our stock review of all the telco companies listed in the PSE. So if you want to familiarize yourself to this sector, there's a link down below for my review of DITO, Converge, and Globe. I really suggest you watch it as well. With that said, let's head on to the video. Now before we begin, I would really appreciate it if you would hit the like button, and if you still aren't a subscriber, might as well click the subscribe button as well. And again, this video is for educational purposes only and should not be used as basis for your investing decisions. Please do your own research. Now who is PLDT Incorporated? Formerly Philippine Long Distance Telephone Company, which we refer to as PLDT or the parent company, was incorporated on November 28, 1928. PLDT is one of the leading telecommunications and digital services providers in the Philippines in terms of both subscribers and revenues, serving the fixed line, wireless, and broadband markets. This is through three principal business segments: wireless, fixed line, and other businesses. The common shares of PLDT are listed and traded on the Philippine Stock Exchange on October 19, 1994. As of September 30, 2021, they serve 77.8 million customers through the provision of mobile, fixed line, and data services. First, their wireless business. This is their short messaging services or SMS business, and their mobile internet services via smartphones or broadband using mobile or fixed wireless broadband routers and other similar devices. Next, fixed line, the leading provider of fixed line telecommunication services throughout the Philippines, servicing retail, corporate, and SME clients. And lastly, their other businesses consists primarily of their interest in digital platforms and other technologies, including their interest in VIH and multi-sys. To understand this better, let's head on to PLDT's ownership structure. Their biggest shareholder is the First Pacific Group, NTT Group, and JG Summit, and 42% of common shares is owned by the public. And breaking down PLDT's branches, so most of their branch are for their fixed and wireless business, while for their other businesses like Multisys, which is a software development and IT solutions provider, engage in designing, developing, implementing business systems, solutions, and services covering courseware, web page development, and designing user-defined system. This is under PLDT Global Investments, at which they have 45% ownership. And for the known e-wallet app PayMaya, this falls under Smart Communications Incorporated, which is in PLDT Communications and Energy Ventures Incorporated, and under Voyage Innovations Holdings or VIH, at which they have 48.7% ownership. So just like Globe's framework of businesses, PLDT as well is very well diversified. In fact, they claim they are the most diversified telco company. Anyway, if you want to know more about the companies they hold, I suggest looking at their annual report since it has more detailed description of each compared to their quarterly report. With that, let's proceed to their financials. Again, I would still be following my checklist in evaluating this company. I can't emphasize enough how important it is to have a checklist to look through when evaluating companies, although this is just a quick checklist for this YouTube video. Now for their revenue, we can see PLDT didn't have much growth, going up and coming down again, although on the brighter side, for 2020 and their latest 12 months, they've picked up the pace again, but still it isn't quite enough to boost their growth rate. Their 10-year compounded growth rate is only at 2.42%. As for their net income, we can see PLDT still hasn't yet recovered their glory days back in 2010, although they are somewhat gaining momentum from 2017 onwards, at which they have been consistent in their positive growth. So for their 3-year compounded average, they've really grown quite well, growing at an average 22.01%, but they still fall short in the bigger picture, at which they have a negative 5.82%. So will we see a comeback from the largest telecommunications company? Well, that we don't know. Hopefully they can continue their positive growth trend since 2017. Let's see in the future. Now looking at their net income margin, we can see why PLDT had a downtrend in their net income. Their ability to produce net profits from the revenue really went down, from a high of 26% down to 12%. Although this is somewhat the industry average, since Globe also averaged in the 12% margin area, but again, there's still a bit more speculation to PLDT since they've only been consistent in maintaining this margin for roughly 4 years. So with that, if you only look at them in the 5-year span, they are doing quite well, But in the bigger picture, that's where things get a little bit confusing. This is where I ask myself when I look at this, would they be able to continue this positive trend? Or would I see another fall like what happened in 2010 to 2016? So there's a lot of question that comes in mind when I look at PLDT's income statement. But let's move further to our list to get a much wider view. As for the company's equity, almost the same as how they are in their income statement. Things got a little bit settled 2017 onwards. So even though the pandemic hit them, they've still managed to grow a little. For their 10-year average, they have a compounded growth rate of 2.73%, and in their 5-year compounded growth rate, it's only at 0.53%, quite small growth compared to their competitors. As for how well they are using their equity, their ROE stands at 16.8%. Now, some of you may be confused as to why this is lower compared to what I showed in my Globe stock analysis. It is because I accidentally used their 7 years ROE average. So it's still the correct ROE for PLDT but in a much wider time frame. But usually I just use the 5-year ROE average, which is now 16.8%. Anyway, comparing it to their competitor, Globe has a 26.7% ROE, Converge 20.8%, and Dito has none since their net income is negative. So PLDT is somewhat lagging behind in terms of ROE, although it's still quite high, above 15%. Industry-wise, this is somewhat low, so that's one thing to take note on. For their debt-to-equity ratio, PLDT stands at 3.90, which means they have 3.90 peso of debt for every 1 peso of equity, so quite high in terms of our criteria, although somewhat lower compared to Globe. Now I explained this in my analysis of Globe. The two companies really ramped up borrowing and spending to grow more this pandemic due to the demand for their business. Still, they fail in our debt-to-equity ratio. And for their free cash flow, as mentioned, they've increased spending, at which led to a negative FCF on their part. So is this a concern for me? Well, although PLDT has a downturn in their net income from 2010 to 2016, they've pretty much stabilized in 2017 onwards. So with this, revenues and income keeps flowing into the company. With this isn't too much of a big deal for me since they have constant inflows of money. And we can see where their spending is going to. They are increasing their range and business, so in the future would provide more income to the company. Anyway, moving on, since their FCF is negative, our next ratio would be also negative. But just to be clear, it was normal for our telco companies this pandemic season. All three big players were at the negative FCF. Again, for Dito, although they have no long-term debt, still they are much worse since the company don't even generate positive net income. As for the company's current ratio, it is at 0.34. So this is very low for me already, since this is even lower than Globe's 0.68. Now I explained why I accepted their current ratio, since we can see the company is growing quite well, their income and everything. Although in TEL's part, yes, they've quite recovered a bit 2017 onwards, but it's still not that big, and they have a very low current ratio. This for me is an X, too low. This means they have 0.34 peso of current assets for every 1 peso of current liabilities, almost a 1:3 ratio. For their PE ratio, they have a price-to-earnings ratio of 16.19, so PLDT in all the telcos has the lowest PE. Globe is at 18.16, Converge 30, and Dito has negative earnings. With this ratio, we can say PLDT is undervalued in their industry in terms of their price in relation to their earnings. Moving on to their dividends, now TEL is a consistent dividend payer, and actually had been increasing it ever since 2018. With this, even with its price slightly going up, its dividend yield still stands at 4.60%. Now in their dividend policy, PLDT gives out 60% of their core earnings. So if you are a dividend investor, this is still a very good dividend yield, and PLDT is already a large and developed company. So there's a high percentage that they can maintain well their dividend payout, although the growth of their dividends still relies if they can continue the growth of their earnings in the future. As for the company's MOAT, up to now, PLDT still is the largest telco company in the Philippines, revenue-wise, and has a lead in terms of range compared to its rival Globe. Although financial-wise, that's where they are lagging behind, size-wise, PLDT is still the number one. And like Globe, PayMaya is also a widely used e-wallet, and PLDT still has the lead in speed in their internet service. With this, we can see, well, they have a very good moat. Hopefully, they can maintain this. And as for their leader, their chairman of the board is Manuel V. Pangilinan, had been a director since 1998, and holds a lot of companies at hand. One is MPI, another publicly listed company, and a lot more. Experience-wise, we are sure he has it. Now for their president and CEO, Mr. Alfred S. Panlilio, He has over 30 years of experience in the field of telecommunications, also holds a lot of companies, but mostly companies under PLDT. With this, we are sure he's not new in the business. 30 years is a long time. Although still quite new in the position, he was only appointed in 2019. Let's see if he can continue the positive growth of PLDT. Moving on to my buy below price, my computed intrinsic value for them is at 2,426 with a 30% margin of safety. I have a buy below price of 1,698. With that, this concludes this video. Now, although PLDT still hasn't yet recovered financially their glory days, we can see this past 5 years was somewhat consistent for them, growing slowly. Although it's only 5 years of consistent growth, that's still a good sign of recovery for them. So that's one thing to take note on if you want to invest in this company. Although we don't know if they can continue this, what we know is PLDT is still continuing to grow their business, putting capital to work so as to maintain their position as the largest telco company in our country. With that, I hope this video helps you out in your research for this company. Again, it's still your decision if you want to invest in it or not. If you're liking the company so far, then do further research. I find it funny for some who wants a direct answer for, is this company a good buy or not? I've shown you my research, said my thoughts about the company, so in the end, it's on you to process all of it. This video is just a quick review. You really have to do your part and be the one to come up with an answer for that. Do your own research and just take all the videos in YouTube as an add-on to your own research. So with that said, before you leave, please do hit the like button first, and do watch my other telco stock analysis. So thank you and see you in the next video.